New Year's Day was turning out to be a perfect start to 2024 with Nifty even making a record high. However, the index in the last hour or so saw a sharp correction which even took us below 21,700. And I have two questions here. What explains that correction? Was it a technical fall? And second, if this weakness persists, where can we find support?
Good morning, Suyash. Wish you a very happy new year and a very happy new year to all the viewers as well. Yes, so Nifty 21,800 to 850 area is the exhaustion zone where we could see some technical sell-off coming in. And overall, the support, if you look at the certain data points,
All right, I think we
one
have...
is the, in fact, improved yesterday to 69% longs against 31% shorts. And overall, if you look at the FII data, they are buying in index options, but they are not trimming down in the index futures positions. So it clearly means that it's a temporary halt, a temporary, a pull. If I metaphorically speak about it, markets did party in December and it was a spectacular rally. Thereafter, it's a bullish hangover right now. And so there is some rest required for the recovery from this entire bullish pattern. So
Right.
that is what is happening right now. On the downside, immediate support is at 21,700. The 21,700 strike OIPCR is well above 1, which means that it's a put heavy positioning at 21,700 strike. So in case if this OIPCR figure melts down to close to 1, then there could be a breakdown below 21,700. And in that case, the next support level on the downside is at 21,500. So as of now, Nifty is in a rest period. It's consolidating. The broader consolidation range would be 21,500 to 21,850. And the day Nifty closes above 21,850, that's when the rooms will open up for the 22,000 mark.
All right, so a close above 21,850 is required to make that run towards 22k. But ma'am, moving on to Nifty Bank. Now the banking index overall was a laggard in 2023, but the index did turn a corner in December. Do you expect this bullish momentum that we saw in the last month or month and a half to continue in the banking bank?
So even banking index has been the laggard all throughout this entire rally. Bank Nifty has always been the last mover. Surprisingly, it's always the Bank Nifty that leads the rally. But this time in this entire rally in last 2 months, Bank Nifty has been a laggard. Yesterday, Nifty made a new all-time high, but Bank Nifty was way away from its all-time high. As far as the levels are concerned, I think 48,000 is a very, very crucial support level that one needs to check out, because if 48,000 is breached, then on the downside, the next support is only at around 47,400. And there is no, minor supports can come around the round figures of 47,500. But overall, the major support is 47,400. So as of now, 48,000 to 48,500 is the trading range, the consolidation range for Bank Nifty. If it is able to move past the 48,500, 600 zone, then there will be no stopping, and we will see Bank Nifty move across 49,000 also. So yes, a directional move will be set in only once either the support of 48,000 is breached or a 48,500 level breakout occurs on the upside. So it's a consolidation phase, resting period for Bank Nifty also.
All right. Ma'am, also wanted to get your view on India VIX. Now that has moved quite significantly. We were at about 11 sort of levels in November, went on to touch 16. Now we are somewhere around 14.5 sort of levels on India VIX. What's your view there? Is this something that we should be concerned about, this sharp spike in volatility?
Yes, now volatility, a spike in volatility has baffled a lot of investors and traders in the market. That's because usually the correlation with the price movement is negative. If the index is moving up, the volatility comes down. But in this case, what has happened in this, there were two instances in December when there was a surprise gap up opening. One was post election results, and one was later after the Fed policy. So in these two instances, a lot of call writers were trapped on the wrong side, and there was a heavy unwinding scene in the call writing positions. So that is the reason why India wicks shot up, because traders had to pay a premium to square off their wrong positions that they were caught into, and that's why India wicks shot up big time. Also now nearing budget and a lot of events lined up in the next 2 to 3 months, I think volatility is going to remain the flavor of the market, and it will remain in the higher band of around 13% to 16%. It may rise further, come close to around January end. We may see it cross 16% also. So yes, it's a matter of concern, because high volatility is always correlated to a negative price movement. So there is a possibility that we may see some knee-jerk reactions in Nifty as well as Bank Nifty.
All right. And moving on to individual stocks, I think there is none bigger than, at least today, than Vodafone Idea. Now, the stock has hit a fresh 4-year high, and it's up somewhere around 30% or so in the last 5 sessions, amid reports claiming that government could sell about its 33% stake to Elon Musk and his satellite internet venture Starlink. Now, what's your view on Vodafone Idea? Because we are seeing good volumes also build up there and a big breakout on price, isn't it?
Yes, so Vodafone Idea has moved above its 200-day moving average, which is currently at 12.64, but it moved above that level after nearly 2.5 to 3 years. And this sort of breakout, whenever it occurs, even the up move is anywhere close to 68% to 100% retracement of the entire price move. Now, if you look at the 68% retracement, that comes close to somewhere around 18.4. And that is the reason why even yesterday we saw some profit booking coming in at 18.4 levels. But it's a temporary retracement again in the up move. From 18.4, it may probably come down to around 16 levels. But overall, the target of this entire breakout is placed at around 25. So any kind of dips that we find, it's a normal retracement in the bull run, and it should be used as a buying opportunity. Targets would be around 25 on the upside in probably next 5 to 6 months.
All right, target of 25 for the next 5 to 6 months for Vodafone. But, ma'am, another stock that's also seeing a good breakout with heavy volumes is Ashok Leyland. Now, the stock, was up somewhere around 3 to 4% yesterday, and it's also trading higher. What's your view on Ashok Leyland, ma'am?
So Ashok Leyland is one of my recommended stocks also, and it's in my recommendation list even today for the show. And the view is extremely bullish. It's the only player in the EV market where we had seen a lot of consolidation in past few years, and now the breakout has occurred. There is going to be no stopping at least up to around 220 levels. As far as trading point of view is concerned, a short-term trading point of view, 200 would be the first target. One can keep a stop loss at 176, where the breakout had occurred a few days back. So view is extremely positive. Any kind of dip close to 181 to 182 levels should be bought into. Stay long in this stock. First trading target would be 200, and if you can hold on for a couple of months, probably 3 to 4 months, then we could see upsides of around 220 to 225. So view bullish.
Ashok Leyland was on your buying radar. What are some of the other stocks that you would recommend at this point in time?
So the view is positive on the entire pharma pack, but out of those, granules is one particular stock where a very good build-up has happened, and we would recommend buying it in the range of 400 to 405. It has moved up today. It opened with a gap opening, but obviously there are, retracements that you will be getting in this entire up move. So any dip close to 400, 405 will be a buying opportunity. The first target would be 440 on the stock, and keeping a stop loss of 387. The next sector that we like is chemicals and fertilizers. It's in the limelight. Out of the in this sector, the stock that we like is Chambal Fertilizer. One can buy in the range of 370 to 375 for a target of 460 and stop loss of 358. So the risk reward ratio here is pretty good. Look out for the proper buying levels. Whenever the dip occurs, 370 to 375 is a good buying opportunity. Another stock is City Union Bank, CUB. One can enter into the stock at a price of around 150 for a target of, it's a short trading call, and the target would be 165. Stop loss to be kept as 144. The other sector that one has to keep a watch on is the IT is already forming a base and bottoming out. So that is one particular sector where one can remain long, one can initiate long positions for next 2 to 3 quarters. And out of this, Wipro is one particular stock that we like. One can enter at a rate of around 475 for a target of 495 and 520 on the upside, and keeping a stop loss of 460. And Ashok Leyland, as I mentioned, that's a buy call, buy trade. One should be initiating on any dips close to 180 to 181, keeping a stop loss of 176 where the breakout had occurred. And the first trading target would be 200. And if you can keep it for 2 to 3 months, then the upsides are up to 220 to 225.